How do you determine that a stock or crypto that is being sold off has more downside risk, or that it is actually offering a great buying opportunity? The technical analysis concepts discussed here can be used for timing all trading instruments, stocks, crypto, forex, etc. In this video, we discuss Tesla, which after a massive rally that gained north of 2,000% since late 2019 is now off close to 50% off November 2021 highs. Is Tesla stock an overpriced piece of trash, or a greatly undervalued gem that's ready to start another bull market run? So the first thing we can do is figure out some price levels. To begin with, let's go to the highs. There was a monthly closing high right there at about 380, and we can see that there was a failed breakout attempt. And this series of failed breakout attempts were a red flag, and also here we had another failed breakout attempt anticipating this move. So now we can flip the script, and what we can do is take this recent monthly closing low from June at a price of 227.47 and use that as our gauge. Anything below this price is risky, and one can anticipate that the stock could be going down. At the same time, a failed breakdown attempt, and if prices recover back above June's monthly closing low, then this is indication that a failed breakdown means that anything back above this price of 227.47 means that this instrument is now ready to recover and could be a good buying opportunity at this moment if it can recover back above this price. Secondly, we can see one of the reasons why from a technical standpoint it is down is because the RSI is dropping below 50. So in the coming weeks and in the coming months, for those who have a longer term horizon, you'd want the stock to eventually hold this area around RSI 50, build on it, bounce back above RSI 50, something I talk on my channel, and support around RSI 50 would be a good gauge. As of right now, we can see the possibility that is forming here that yes, we are making an attempt to fresh lows, but we have this potential for a positive divergence on the RSI. So if the stock turns positive for the week and confirms this positive divergence, and if it moves above 227.47, this is a buying opportunity. Understanding that if this line here is broken to the downside and there is no positive divergence, the risk for lower prices is there at this moment. On the daily, one should not anticipate a recovery as long as the RSI is trading below, and this is true for any instrument. As long as an instrument is below RSI 30.9, it is very bearish and chances of making lower lows is very high. So one requirement here is for those looking for an entry would have to insist that the RSI is back above RSI 30.9. Additionally, based on my uniformity concept, you'd want the stock to leave evidence of uniform activity back above this blue line, which is the uniformity support line. Links are going to be in the description for more explaining this method. But you'd want the RSI to be back above this blue line, confirming that it has gone below the line back above it with uniform activity, and that this movement that we're seeing right in the stock is a trap for those going short. Otherwise, the stock would be concealing that the next major trend is not down, but actually for a recovery. And we can see this if we take a look at the 195-minute chart. We can see coming off the lows of, let's call it late May, we can draw our uniformity support line, and we can see that we are slightly below that, but we are holding above RSI 30.9, which means that there's good indication here with support above 30.9. Coiling back above this blue line suggests that around here, actually, this might be coiling to go higher. Find more free information about these concepts in the description box.